Buy or sell Matson shipping. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the other themes and we have one called mixed shipping. Now the performance has been pretty spectacular vis-a-vis the S&P 500. If we go here to Matson, 71-ish% here from the 52-week low, and we are basically at the highs, and they are in the container ship business. Here is their website: ocean shipping, truck, rail, and logistics. So here you can see one of their ships. There's this major issue now in when it comes to shipping. The thing is that this is a temporary anomaly. When we look here at the long-term picture, weekly data points, you could argue that we do have some kind of super cycles around here. And we also have these small time cycles that have been rather reliable for quite some time. So even when we go back here to the mid-2000s, we do see that the time cycles, they seem to play themselves out. That we are currently part of this major rising phase that is supposed to peak around now. We have seen an absolutely extreme rally here from the lows. The declining phase is supposed to end around 2023. So yeah, this is a very, very mature rally. Going here to the daily data points, you can see that there's been a spectacular move here from the lows. Currently, the bulls are certainly in control, but we need to then ask the question, historically, looking at long-term trends, what tends to happen when we have these readings? Looking here at the MACD, weekly data points, we have readings that we have basically haven't seen before. Looking at accumulation distribution, you could argue that we do have we don't have confirmation here for the latest rally. When we look here at the RSI, we are at a very high level of RSI that historically doesn't usually work out. Here we had similar RSI back here. We got a pullback. Then we fast forward to this point. Then we did actually rally higher, but then we had one of the biggest corrections we have seen in a long while. If we measure this sell-off from this high to this low, approaching minus 60%. Looking at the PPO, distance from the 20-week, 50-week, 100-week, and the 200-week moving average, going even back here to 2004. These are extremely high readings that usually are followed by corrections. When we go to the daily data points, then it gets very interesting when we here look at accumulation distribution. You see that there's been a decline here in the accumulation, even though the price has gone up. So that's a solid bearish divergence. When it comes to the RSI and PBOs, we have a pretty similar message. We were higher back here, but this was also followed by pretty substantial correction, approaching minus 22-ish%. Okay, so basically the current readings are high risk for the bulls historically. That is the trend. When we look at correlations, looking here at weekly data points, 93% with the S&P 500, 65% with the dry bulk ETF. There is a boat ETF, but if we go here to the daily data points, we don't get it there either, but let's change the numbers a bit. Minus 15%, but we have very little data when it comes to that ETF because it's relatively new. Back to the weekly data points, minus 75% negative correlation with the dollar index. So that's a strong negative correlation. Short term, there actually is approaching an 80% positive correlation with the dollar index. 78% positive with the S&P 500 and 46% with the dry bulk ETF. When we look at the seasonality over the last 5 years, we tend to see a weakening here. So November usually is strong, but then December is weaker. Looking at the last 10 years, then you see that seasonality is pretty clear. From October to November to December, you do see a very clear weakening. January tends to have a little bit of a strength in it, but then February, March, April, and May are weak. So the seasonality around the corner is clearly bearish. At least it's more bearish than it is bullish. We have smashed above this diagonal trend line, but that also just shows us how mature this rally is. When we look at the analyst price targets, then we do see that the average price target is 2% above the current stock price, but that is very modest. So basically, the analysts think that this is very fairly valued. The highest price target is only 3% above, and the lowest price target is 1% above. So yes, the analysts, they are bullish, but this is basically telling us that the good news are just priced in. If we go here to Sachs, they have a #1 strong buy. They see an A value score and A growth score, but there is an F momentum score. Industry rank top 27%, but I'm just baffled that there's an A value score. Given, because they're supposed to be, well, there usually is an inverse relationship between how high the share price is and whether it's value or not. The high, when you get these very excessive share prices, it's supposed to have a negative effect on a value score. So I have no idea what this means. Interestingly, even though Sachs think that this is an A value, one strong buy, when you look here at the insiders, they are selling. They have been selling and selling and selling. The vast majority here is sales. So when you have D, that means that it's a sell. If it's an A, it's a buy. And you see that the last time we had, buying here, that's back in August. So yeah, the insiders are selling. That's bearish. So to sum up, technicals shows that this is a very high risk situation for the bulls. The seasonality is also bearish. The fundamentals are also bearish, and the insiders are selling. So taking it all together, we could make a way stronger bearish case than a bullish case for Matson.